I see politics. It's everywhere.
Hello, listeners. Welcome to another episode of Geopolitical Cousins. Marco and I dive into some questions about Iran, about the AI economy. We close with predictions on the NBA Finals, lots of other interesting things in here. Take care of the people that you love. Cheers. We'll see you out there. All right, your cousins recording for you on the weekend, Saturday, May 30th, 9:30 a.m. U.S. Central Time. Cousin, I played basketball yesterday for the first time in like 3 to 4 weeks.
Nice.
I am sore, man.
Yeah, man.
I'm getting old.
Are you in your 40s?
I am not yet in my 40s.
Oh, wow.
No, I should probably not complain.
You're so much younger than me, because I am definitely well into my 40s. And so I played a Saturday morning game, which I'm going to go to after this. And it's like 4 or 5 hours, outdoor. And basically it takes me now
outdoor.
It's outdoor. Yeah.
Oh, dude.
And it's, Southern California. So the weather is always like amenable to that, other than like maybe during the 1 month you have the rain season. So it's outdoor. It's 4 to 5 hours. You get to sit because, you lose on occasion. Yes, your cousin does lose on occasion. And then 48-hour recovery. It's a 48-hour recovery.
Yeah, no, I assume it's a concrete court. So you're playing outside on concrete.
Oh yeah,
man, my knees and hips are. I mean, I'm inside at the J here, playing indoors. I went hard for an hour yesterday. I wear this Garmin watch that tracks me, and after I got off the floor, it recommended 62 hours of recovery time. So that's where I am right now.
Well, on occasion when it's really hot, I mean, this is obviously water weight, but like I'll come back like 5 pounds lighter.
Yeah,
it's insane. But anyways, it's awesome. I mean, this is the life, right? Ball is life. So I'm up right now. Let me tell you, I don't feel great. I had to do a crazy week this week where I did one of those in and out. I went and I spoke at an event for my buddy's company. So I had to fly Tuesday night, land morning Wednesday, do the talk, do a video shoot, do a client call, fly to Austin, all in like that basically, And then obviously you get sick. Like, oh, how did I get sick? Oh, well, maybe because you didn't sleep for 2 nights. But, so check this out. This morning I had an alarm. So by the way, this is also for all our listeners. Just a glimpse behind the curtain, life of the glamorous sell-side strategist, but also what it takes to do these pods. So I've got an alarm on a Saturday morning. I'm sick. I've had a really long week. And it's, to wake me up so we can do this pod on a Saturday morning when I could be using some recovery. And I pressed the snooze button. And the moment I did that, I had a dream. And in this dream, you and I had a pod scheduled back in my hometown of Belgrade with my great aunt in her little Soviet apartment, and I had to get there, So I'm hustling to get to Novi Belgrade, which is across the river, so I can do the pod live with like a 97-year-old because you're demanding it, and then you pick up the call and you call me, and you tell me, "Don't worry about it, buddy. Let's do it another time." And I'm thinking to myself, I'm halfway. And I'm like, fine. So I go back to sleep and I oversleep for our pod. And that's why I texted you. I don't know if you noticed, like, are we still on? Because it was such a vivid dream and your soothing voice was so vivid. I thought we weren't going to record.
Wow. Well, don't hold cousin Marco to anything he's going to say in this podcast right now. For all we know, he still thinks he's lucid dreaming and hallucinating in
this is what happened. Yeah. So anyways, that's why we're going to have to truncate this a little bit because I know you got to go in an hour. So we're going to have to make this tight. So let's just get right into it. What do you got for us, Jacob?
Yeah, well, first of all, Russillo does Tales from the Couch when he's like talking about his analysis of NBA games from sitting on his couch. So we got to do something like that for us, like because Tales from the plane of the sell side, because we can't do it on a plane. I don't know. We'll have to work.
We'll have to think about that. That's a really good idea. That's a really good idea because you get a lot of interesting tales in the road.
You do, and there's also something to it of like you're like It'd be funny to see your and my initial reaction to a news story, and then what that reaction becomes like once you sit down and actually read things. Because I'm like we're like any other humans. Like if there's a headline or something, we look at it and you have an initial reaction, and the discipline of analysis is to be, okay, I'm going to put that reaction in a bento box and go read like 10 things about this, and then I'll like develop a take on this or something like that. But it'd be funny if we like, what's your initial take with no other information anyway, but we're going off the rails here. Okay, we have plenty of things to talk about. Saturday, May 30th. I know we probably don't want to start with it, but let's give the listeners a little bit of what they want. Let's talk about Deal No Deal, the new reality TV show brought to you by Donald Trump. Is there a deal with Iran? Is there not a deal with Iran? Our cousin Rory has been, there's not going to be much left of him at this point. He's got the lighter dangerously close to himself. It's not just him, though. I don't know if you saw the CEO of Chevron went on Bloomberg TV just yesterday. And he was wearing a nice suit, by the way. Very nice.
Oh, yeah? Oh, cool.
Very calm, very collected, but was basically saying, yeah, we're like weeks away from shortages here in the United States. Prices are rising, demand is up, refineries are at max capacity, so it's super tight. We've been exporting to the rest of the world, like not going to go so well here in the next couple of weeks. So that's CEO of Chevron, not like, our friends on Twitter who are lighting themselves on fire. That made me sit up in my chair a little bit too. Where are you at with the ceasefire reports? I'm not really taking them seriously, but I don't know. Maybe you feel different.
Well, I just think that, time's up. The CEO of Chevron now sounds like Rory, our cousin. So like time's up. This is it. We've got a month. And so the reason I say that is because if President Trump was going to do something, you want to do it while you got inventory covered. So it's so interesting. In this particular conflict between the US and Iran, global inventories are ammunition with which you bomb Iran.
Mm-hmm.
Right? Like the more inventory you have, the more you can pulverize Iran because you don't care about their ability to close the Straits of Hormuz. And so time's up, time to make that deal, and that's kind of where I'm at. And I think what's interesting though is that I think on the last podcast, I said that both sides were trying to figure out how to sell this domestically. That seems to be the holdup. The holdup, right? How do you sell this? And I would just say that it's interesting to me that President Trump is he seems to be hesitating because of all the hate he's getting. And as you pointed out last time, well, that's very un-Trump-like. But that's it. He just has to, unfortunately, man up and take, a bad deal. A deal that's not going to be great for, from a perspective of risk reward. Why did U.S. risk a global recession? What's the reward for it? It's going to be pretty minimal. But we're out of ammunition, effectively. This oil barrels stored in China, in the United Kingdom, in South Korea, in Japan, in the U.S. Strategic Petroleum Reserve, they are the bullets with which you fight Iran. It gives you time to have a conflict. And for the last 2 months of this ceasefire, the U.S. has kind of not done anything. You know what I mean? It hasn't really prepared itself for a longer war. It hasn't put military equipment in the region with which it could threaten Iran further. It's just kind of yelled from the other side of the bar.
Yeah, it's it's confusing, and I don't know if you saw this. One of the craziest things, this was 3 days ago now. It's crazy that this was just 3 days ago when Trump was speaking to reporters at the White House. And he didn't talk about Iran. He started talking about Oman. And literally, I will quote the president here: Oman will behave just like everybody else, or we'll have to blow them up. They understand that. They'll be fine. He's talking about that in the context of Iran discussing a partnership with Oman in charging fees or environmental fees for ships that are going through the Strait of Hormuz. And Trump is latching on to this. There's not going to be any toll through the Strait of Hormuz. Pretty clear there's going to be a toll through the Strait of Hormuz, or you can call it an environmental tax, you can call it whatever else. And it might be a net positive if Iran is working with other countries in the region to try and actually set up a reliable tolling mechanism that people can actually deal with. I also like it's also a case of like the left hand not knowing what the right hand is doing. Like my favorite Scott Besson, and maybe we'll cue the Scotty doesn't know music here. When he did an interview yesterday or the day before where he was bragging about stealing $1 billion worth of Iranian crypto and say, oh, these guys are typing in their wallets. They don't even know we have their wallets. First of all, I don't think you can do that. Like, I think that's like actually impossible. Like, you're just able to hack into anybody's wallet. I'd like to hear a little bit more about that. Number two, you're talking about giving them $8 billion to start with to extend the ceasefire from Qatar in reserve. So good job stealing $1 billion of crypto, which is probably for some Iranian coder underneath his mom's basement who's a dissident against the regime. You're probably not stealing that from IRGC coffers, I would guess. And yeah, it's just this mismatch between trying to show strength and like the United States has really shown Iran what's up, where it's like, no, Iran has actually, stood the fight. Like, it took the punch, it's still here, and it's still going. So I don't know. I mean, if the litmus test for all this is going to be that President Trump does not want to be called weak and doesn't want people to point out that he didn't do well and got an objectively worse deal than President Obama did, like, that narrative's not going to be there. There's no Wizard of Oz PR maneuver that you're going to do to make that particularly clear. And, those folks who are in the MAGA base who have a big bullhorn, like your Tuckers and your Ted Cruzes, like, they're not cool with this. They're not going to be cool with the deal. They're going to be out there banging the table. And then I think the real kiss of death is just look at the last CPI print. Look at energy prices up 17%. Even if the Strait opens tomorrow, the next CPI print is going to be way worse. And the one thing that Americans will trust more than whatever nonsense is on the television is when they go to the gas pump and it's over five at the gas pump. And like, I saw a 450 handle here in New Orleans just the other day.
Oh,
that's
poor
crazy.
you! Oh, poor you! I'm so sorry for you.
Hey, I live with the threat of hurricanes like completely destroying my existence every other day. So it's the cheaper oil prices is what I get.
Whatever.
You chose to be in Santa Monica. Nobody said you had to be in Santa Monica.
There's fires here. Like,
okay,
there's and earthquakes and $6 gasoline. Come on. Okay, so what am I going to say? First of all, on Oman, I saw that when it came out. But the most hilarious part of that statement is you can see his brain go like, whoa, 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 you went too far. Rein it in, Donnie. And then he goes like, they'll be fine. Like, we should put that statement in the show notes somewhere. But it was like, it's just like, they'll be fine. It's just like, I can see him doing that. Like, they'll be fine. Jacob hates me. Jacob, with his TDS, I'm going to have IRS audit him. He'll be fine. It's just.
You're correct, Mr. President. I will refuse to use your $250 bill with your face on it on principle because I just don't want to have that in my wallet.
I'm buying so many of those bills. I got to tell you right now. The posterity of your family has to remember this time.
Yeah.
Because you know why? This is either a comedic interlude into the next 250 years of glorious American history, in which case you definitely want to have that $250 bill to show your grandkids, or this is the beginning of a new era in which that's the only denomination you'll be able to use when $250 in 10 years buys you a chocolate bar.
Yeah.
You see what? So like you have to have it. Like the choosing not to have the $250 bill makes no sense. I will send you some.
Well, that's great. That's why I have a cousin who's going to rely on me not to make bad financial decisions by passing the $250.
It actually reminds me of something. This conversation we're having right now. I know we've just gone swerved, but the caffeine is kicking in. So this is just what's going to happen. I'm like LeBron right now. 4 hours before the game stretching. This is what I do. Like, I'm slowly stretching into my mental capacity. So I remember my mom, she kept my little red scarf and my little like battalion hat. So basically, let me wind this back a little bit. When you grow up in a communist country, you glorify the World War II, obviously. Nazis are evil. we're going to have a World Cup episode. And, one of the funny stories I'll tell then, again, is that when I was a kid, I always thought every soccer match was between Yugoslavs and like the partisans and Germans. I was so indoctrinated as a little kid that the Germans are just always the enemy, right? So anyways, one of the things you have is like little Cub Scouts, but they're called pioneers. And it's very militaristic. And you have like literally like a battle hat, little tiny cute battle hat and a red scarf. And I had that. I was a pioneer, obviously, straight A student. Let's go. And then communism collapses and I no longer have that, like we throw it away. And one day I was rummaging through my closet and I find it in a plastic bag buried deep in the back of the closet, and I quickly run to my mom, holding this bag of this like communist paraphernalia. And I like run to my mother and I'm like, Mom, somebody kept this garbage. I want to go burn it, because we were a very kind of bourgeois family that always hated communism. And she looks at me and she says, I kept it. Put that right back in the closet. And I was like, what? I was like, my whole image of my mom, who comes from a very bourgeois family, like artists, painters, doctors, poets, that's like her background, very anti-communist, obviously. I was just like, Mom, and I was just like, Mom, what? And she's like, you're going to be wearing that and singing those patriotic songs when this shit comes back. Put that thing in the back and don't touch it again. Like it was. So my point, Jacob, is fuck yeah, you're going to keep some of those $250 bills in the back. We're all going to be very happy using them at the food bread lines,
Yeah, no, sounds great.
So anyways.
Well, I will just say there's one thing I wanted to say, and then there's one thing I wanted to throw at you on this conversation to try and extend it beyond Iran. The first is, at first it was folks like Rory and Eric Nuttall. Now it's people like Jeff Curie. So Jeff Curie went on Squawk Box just, I think it was yesterday or day before yesterday, and he had this very pithy line. He said, 5 deal announcements, 0 closes, sell the tweet, buy the molecule. And you've got the CEO of Chevron saying pretty concerning things. You've got, Exxon on an investment call saying things are not looking particularly good. You balance that with I was reading another I was reading a Substack account called Market Vibes. The guy is kind of anonymous, doesn't have his name, but somebody who claims to have been trading for a long time and does the math and says actually there's plenty more oil out there, that really this is more of a story about the fact that we need oil less in the economy, and all of this doom and gloom porn is just really not warranted. Which concerns me, because then we could be doing this for months more. What if Trump is on weird Substacks?
What if he's reading that
from that guy versus but the doom and gloom hasn't been true thus far. I was writing a report just before we got on, and I started the report by saying, when I started at Stratfor as just a little bitty intern, one of the first projects I worked on was a red team of our Strait of Hormuz analysis. And we concluded that this wouldn't happen because of the potential impact of higher oil prices. Now, that was 2010. It was a much different time. But still, we're still here, but things have fundamentally changed. Anyway, what I wanted to ask you was, I was having lunch with a friend yesterday, and this is somebody who's not in geopolitics, somebody who's not in markets. And I feel like he's our ideal listener. And sometimes I think we lose track of that ideal listener. So somebody who's interested, but not super fluent. And in the middle of lunch, he was like, you do a lot of this politics analysis and things like that. Why are markets at all-time highs right now? That doesn't make any sense to me. He doesn't even follow markets that much, but he was like, I've noticed that markets are at all-time highs, but I hear all this stuff about the Strait of Hormuz, and I hear things that are blocking. And I'm trying to develop my own thing about this, but I wanted to ask you, how would you explain to somebody right now the fact that markets are at all-time highs? Because if you had gone back to 2010 intern Jacob Shapiro at Stratfor and said, hey, the Strait of Hormuz is going to be closed for 3 months, I would have, to return to Mad Max, I would have thought we were in Mad Max Fury Road. And not only are we not in Mad Max Fury Road, we are in literal record highs for the NASDAQ and the S&P 500 as of where they closed on Friday. So something here is not quite adding up. And I have a theory, but I wonder if you have a theory.
Well, I wrote a report last year in the midst of that, Liberation Day, right? So Liberation Day comes, President Trump imposes 35 to 40% tariff on every country in the world. And the report that I wrote was titled, "What Politics Taketh, Politics Giveth Back." And that was early May. Why that title? What I was trying to explain to investors, and I guess your friend, is you have to be very careful not to equate political and geopolitical events with material reality. So there is no, like, Moses did not come back from the dead and like drain the Strait of Hormuz the way he did with the Red Sea. Like, that did not happen. Ships can still go back and forth, and they can go back and forth in size tomorrow. And so what happened during the tariff kind of hysteria is people thought that the 40% tariffs were permanent. And that's why we sold off on Liberation Day of April 2025. And what I told my clients was, hold on a second, this isn't an actual real event. It can be modified because it's political and geopolitical. And I think that's what a lot of people are like. Jeff Curry will be wrong. Rory will be wrong. And Rory will be wrong because of how he was right. So he was bearish oil because he had articulated in 2025 the extraordinary oversupply. And so he was bearish into the largest increase in oil prices like in human history. And now he's bullish at the peak, and he's going to be wrong on both sides. But his barrel counting is correct. But what if you watch Rory's tweets, though, he is dangerously verving into the geopolitical analysis territory now. Like, every one of Rory's tweets now is about the deal. And that's very dangerous because that's not necessarily his skill set. But he requires the current situation to remain permanent in order for his very bullish oil view to be articulated correctly. And this is the danger. Politics and geopolitics can pivot 180 degrees. So we go from President Trump imposing 40% tariff on penguins. We go from Peter Navarro saying to everyone who wants to listen that the US is not negotiating. Remember this? Last year. And then all of a sudden, boom, done. 10 to 15% tariff deals on the rest of the world. Market loves it, because the market reacts to us going from 40 to 15, even though we went from like 5 to 15 in truth. And then nothing happened. So the question you're asking me right now, Jacob, you could have asked in December of last year. Like, hey, wait a minute. Did we not just increase our tariffs to the highest level since 1930s? Why is everyone okay with that? And the answer is because the global economy is more resilient. But the other underlying answer that I'm emphasizing is that too many people in the world, they are almost like children, right? They hear President Trump say X and they're like, oh, fuck, it's X. And it's like, no, maybe it's X minus 100. Like, it's politics, it's geopolitics, it's variable. And it's variable in ways that, like, supply and demand dynamics of real commodities, the way the impact of interest rates, the way that everything else is not variable. The way that if you're schooled in macroeconomics, you're not used to this, someone just dialing up and down with a lever macroeconomic factors. But that's what happens, Paul. And that's why I think that, I think 85% of all investors are cognitively, and when I say investors, I mean like broad swaths of humans who operate in the epistemic community that is finance. I think about 85% of them are just cognitively not ready for this shit. And the reason they're not ready for this shit is because they're not used to dealing with the gray, with the mushy. They don't have a philosophy or anthropology degree. But I honestly don't think you need a STEM degree to be in finance anymore. I mean, certainly I don't have one, so I'm biased to say that. I have 3 fucking degrees in political science, which makes me incredibly, I'm so overeducated in something that's like moronic. You know what I mean? Like, I'm clearly qualified to flip burgers, but the reality is that, like, I took a philosophy class where you sit down and you're like, well, what is truth? What is justice? And you debate things like, well, maybe murder is just. Maybe walking around and just killing people randomly is actually just. Those are the debates you have in these philosophy classes. What they do, like, all of our STEM colleagues obviously look at us and laughed at us like, bro, I'm learning how to build a bridge using Newtonian physics. And you're debating whether murder is just. Yeah, but like, unfortunately, my friend, Newtonian physics does not exist in finance. So people who are very adept at using Microsoft Excel, who are very adept in mathematical modeling, what they miss is that the world is not that of levers that are like tightly pulled, and then you get a nice, neat model, and then, wow, oil is at 160 if this happens. Yeah, but what is this? This is why I keep telling my clients, what is the blockade of Hormuz if ships go through? If you get 2 VLCCs going through Hormuz, you're extending the time that the inventory will be helpful, because that's 4 million barrels. Fine. It's not a lot, but it's a quarter of what we used to get before. It's actually pretty meaningful if 2 VLCCs go through. So that's why a lot of this, the world that's now happening, what I would tell your friend, like the world of finance and economics, which used to be like Newtonian physics, it used to be like building a bridge, and whoever was better at the elegance of mathematics got the better forecast, although that's not necessarily clear because hundreds of PhDs working at central banks miss every fucking recession ever. But there was at least an epistemic mystery that we in finance somehow knew how to do this, because we could pivot an Excel table, and then boom, we get the world of Putins and Trumps. And what you have to actually be comfortable with in order to be in this industry is you got to understand that there's this gray world, mushy, qualitative world, that you can only unfortunately learn in a philosophy class or anthropology class or all the other degrees that, most of us kind of made fun of, including us in political science, because we in political science steered heavily towards the mathematical because we were insecure as scholars. And so we basically pretended to be economists, and economists pretended to be physicists. But now I'm steering into academic debates that really no one's going to be.
This is why I didn't get a poli-sci degree, because I took one class in poli-sci and it was basically a statistics degree.
Oh my God.
And I started doing other things. And not to, yes, financial analysts missing recessions. I think 95% of U.S. analysts probably missed the collapse of the Soviet Union. So we can all throw shade at each other. When you're too close to something, it's hard to do that. By personal anecdote, I was there's a park right across from the well, it's not the port, but there's a park where you can see the Mississippi River, where I take my daughter sometimes to play. And it's been really interesting to watch the changing composition of ships that are coming up and down the Mississippi over the past week or two. Like I saw a tanker yesterday, like much bigger than I'm used to seeing. And I went and looked it up, and it was like previous port of call, South Korea, flagged in Singapore, like very obviously coming here, probably to get oil or other refined products, like watching those supply chains move in real time. And to your point with oil, the market can get really efficient about moving things around, more efficient than maybe doom and gloom folks talk about. But what I wanted to throw at you was it feels to me like there's a push and pull in the global economy right now. And I feel like on the one hand, you have the AI story, and it's driving up growth, and it's driving up markets, and it's giving people all the glittering future that they want. And I mean, if you look at the top performing, you probably know, what is the top performing market this year in the world?
South Korea,
all because of two companies, Samsung, SK Hynix, because they're part of the AI trade. TSMC, like up over 100% year on year. My favorite example of this, Toto, the bidet manufacturer, realized that some of the ceramics they're using in their products can be used in AI. So now they're an AI story too, and their stock has exploded. Yeah, like so cool. Like crazy stories like this. Even with China, like I was just digging into this, like China, real estate sucks. They're trying to boost consumption. It's not working. It's exploded in China, demand for compute. The Chinese are using AI and compute power like crazy. They've increased their compute demand by 1,000x over the last 2 years. So even the AI economy in China is thriving, even while the rest of the economy is not thriving. So you have this story. And in the United States, it's refracted not just through the Magnificent Seven and all of this spending. Like you also, if you go on like freight waves, for example, or follow folks who are in the industrial economy or the shipping economy, they will tell you, this is great. We're growing like gangbusters. There's huge demand. Like everything is going wonderful. You flip that over, though, and even before the war starts, and even before the tariffs, you've got this K-shaped economy. So you've got the top 10% of U.S. households are accounting for nearly half of consumer spending. You've got real wages are not keeping pace with inflation. And that's been true for over a year, and that's starting to accelerate also. The personal savings rate has collapsed now to its lowest since July 2007, and it's almost halved since President Trump took office. So that's people spending savings and YOLOing it into stuff. And the YOLO bill is up. It's time to pay up, just as you have CPI increasing because of energy and because the tariffs are starting to bite a little bit. Even if oil stays where it is today, we're recording May 30th, Brent crude futures hovering around 90 a barrel. And okay, Jacob in turn from 3 months closure of the Strait of Hormuz. Oh my God, I thought we'd be at 150, 200. You need oil at 90 a barrel to have an 18% year-on-year increase in energy for the CPI, and to have real wages that are not keeping pace with inflation. So I think I've even been guilty of thinking about the doom and gloom porn and thinking about, once I see 200 Brent crude, I'll know things are really bad. I'm beginning to think that it doesn't matter. You don't need 200 Brent crude. You don't need 150 Brent crude. If it's 80 Brent crude and real wages are not keeping pace with inflation,
exactly,
and all this stuff is happening, like we're already there.
Oh yes,
and the way I would close it is it's this push and pull, because the market is taking the AI growth story. So when the answer that I gave off the cuff to my friend at lunch, and which I'm now trying to put into a report, is it's this push and pull between the AI growth story and then the K-shaped economy and protectionism and geopolitics and everything else. And clearly, the clear winner so far this year has been AI. Like, you're the godfather of fading geopolitical risk. Should have faded geopolitical risk. Like, things are great. They're great across the world right now.
I've never turned bearish on equities except for 1 month over the last 6 that we've been in.
And the thing I would just raise is, like, at what point does the pull start to go?
So let me
just the last point, and then cook. Yeah. Because if it's the top 10% that is driving consumption, and if it's the big corporates with lots of money on their balance sheet that are building things out, like, confidence doesn't go slowly. It doesn't drip. Confidence goes like that. And when it goes from them, like, you would think, and I don't want to go into, we were wrong about doom and gloom porn about oil, so let's go doom and gloom porn about recession and the top 10%. I don't really want to go there, because the right bet would have been to bet on AI. But I think that's the push and pull. And the AI story is winning, and the growth story is winning so far, despite the tariffs and despite the war.
So first of all, you have to understand, like, the reason the doom and gloom was wrong is because the market has to assess all probabilities, not the ones that you are most passionate about. So if you think the Hormuz Strait is going to be closed forever, that's a cool story, bro, but like the rest of us don't. And that's where the Twitter doomers have just had their fucking faces melted. Because they thought Iran would never acquiesce to a deal. Right now, they acquiesce to a deal, by the way. They're the ones that have actually cried uncle even before the US. I mean, like, why do we have this deal on the table to extend the ceasefire or let some more ships through? Clearly, all the things we've articulated that, I've been banging the drum on, like China pressure, they don't want to piss off the rest of the world, is working. And so that's the first answer to your friend. The market doesn't just operate on the reality that it's in. It has to take into account all the other scenarios. And basically, the market has been in violent agreement with me. And my view has been sanguine throughout all of this. Like, don't worry about it. Like, the two sides will eventually figure it out. Now, that makes me very uncomfortable, because obviously there's like some 20-30% probability it all goes sideways.
Yep.
But like, look, $200 oil, no, like, Samsung's not going up in $200 oil, right? Like, that is, everything goes down. And the market has said, look, that is a risk out there. Let's bid up energy and services. But that's not a risk that I'm going to bet on as the most likely outcome. And so this is what it's very important to understand. When something is political or geopolitical, it's bound by the reality of the doom and gloom. Why did President Trump go from 40% tariffs to 10% tariffs in 2025? Why? Because 40% tariffs are really onerous and would have caused a complete global collapse. Because bond yields in the US went up despite the revenue associated with 40%, because you're not going to collect any revenue at 40%, because no one's going to import shit at 40%. Right? He needed to find a comfortable level of tariffs that's good for the market, for the economy, for the fiscal picture, and he found it. Similarly now, Like, market is not going to lose its cool because it saw what happened in 2025. It learned. Market is a always learning mechanism, and so it's progressed. It now knows not to take these things for face value, that they are negotiating positions, that we're gonna land the plane somewhere. Is there a risk in that? Sure, there is a risk. You know what's a bigger risk? You sitting on the sidelines and posting shit on Twitter about how Marco doesn't know how many VLCCs have gone through. So like that's the reality of the market. It's constantly pricing in different scenarios, and it's seen President Trump operate in the past. And so it knows not to take as given a certain level of dangerous policies. Now, your question is like, okay, cool, but even this mushy middle that, Marco, you've been talking about, this idea that the Hormuz Strait is a flexible membrane, even that mushy middle actually has pernicious outcomes. And you're right. Now, what's interesting is that when the way you kind of like position the view is that 10% of households are responsible for like majority of consumption in America.
Half of consumers.
All right. So in that world, we actually don't give a shit. Everything is fine. If the plebs don't want to buy anything, that's fine. The elites will. But if you strip out auto purchases, if you just strip out auto purchases, and I think autos are like 17% of all consumption, the second after housing. If you take out the auto purchases, I don't know if you know this.
I don't.
But it's all the same. Every single income level contributes equally. Yeah. Kind of weird, right? Like, I'll send you a chart of that.
So the top 10% are just buying cars?
That is where, yeah, basically. Yes. Yeah. Well, it doesn't mean that they're just buying cars. It means that only they are buying new cars. And that's so if you strip out auto purchases, the chart of I split Americans into 3 different income levels by income. Actually, a client of mine schooled me to this. This is why it's great to talk to clients and have really smart clients. So I can't take credit for this chart, but a really sophisticated, basically what I think is the most sophisticated hedge fund in the world. My client, one of my clients, obviously many clients, but this one, I love these guys. These guys are animals. They're so good. And they showed me this. Now that's actually more bearish than your view, because it's just patricians, like who cares? Like, who cares about the plebs? But the plebs actually do matter. They kind of do matter, because if you take out the cars, they're just as important. And that's where this is the funny thing. And this is, look, Baron Rothschild said what? You buy on the sound of cannons. So fuck yeah, I fade geopolitical risks, because the smartest investors before me have done that. My entire book is basically just, a modern take on what Baron Rothschild did in the fucking 18th century. Okay, and I use some quantitative mumbo jumbo to prove that the way to get alpha is to fade geopolitical risk. But the fact is, what he said was you buy on the sound of cannons, but don't forget the second part of that phrase. And you sell, right, on peace, on the sound of trumpets. Like, you want to sell. So here's the thing, Jacob, that I'm starting to worry about. All the doomers were wrong. I mean, so wrong. I mean, if you're a commodity strategist like Jeff Curry or our buddy Rory, like, no one's going to hold you for like your S&P 500 view, whatever. It doesn't matter. But if your job is to predict the S&P 500, the stock market, and you've been bearish during the last 3 months, like, you're updating your fucking resume. Okay, so that's the first thing. But now, when the war ends, there's going to be this real pressure for everyone to turn mega bullish because of the AI story, which is going to stay where it is. But underneath this, we are now in a world where that inflation is creeping up. It's going to change monetary policy. So over the next 6 to 12 months, we could have completely different regime that we live in, because what is the central bank of the United States, the Fed, going to do? If S&P 500 in 6 months is at 8,000 and CPI is at 4.2%, like, you're so far away from your mandate like so far, and stocks are up. Like Kevin Warsh, our new Fed chair, is not going to sit there and be like, well, I promised Trump. I mean, after the midterms, even Trump might tell him like, yo, brother, like inflation's hot. Like, let's go. Like, we gotta go the other way, right? I mean, I just got my ass kicked in the midterms. So I completely agree with you. What's funny about this is it's kind of what the Rothschilds figured out in the 18th century. You want to buy when everyone is out there tweeting about how we're going to like get to $200 oil. It doesn't happen. But when the war ends, the problem is you're dealing with some of the consequences of that war. And I think we are going to be, I think you're completely right. I think that households in the US are going to be under significant strain over the next 6 to 8 to 12 months. But the interesting thing is that everyone's going to tell you, who cares? The AI story is great. And that's where, like, I think you have to kind of like look at the two and weigh them appropriately. CapEx has been leading the economy. It's been great. But what's the second derivative of data center build out? And this is what a lot of people mistake. They always think that absolute numbers matter in finance, in the markets. One of the things I learned at BCA Research, and I mean, this is a firm that's existed for almost 80 fucking years. And so one of the things that I learned is how second derivative is so important. It's the rate at which change occurs. Mm-hmm. GDP growth, right? The GDP growth, the figure we all obsess about in finance, is basically a rate of change. But what leads a rate of change is the change in the rate of change. And this is, by the way, this is same in your life. You want to lose weight? You're not going to stop drinking. That would be unsustainable. If you like to have a glass of wine every day, and then someone comes to you and says, stop drinking, like, sure, you can do that, but that's, I think, not sustainable. You just want to get your rate at which the change occurs to be positive. So instead of having 7 glasses of wine a week, why don't you start with having 5? Hey, that's positive. Like when I figured out what second derivative means, I became healthier. I became a better market strategist. The second derivative is like the truth. I want to write a whole philosophy book on the second derivative. It is the most important mathematical concept. Of course, when I was in high school math, I was like, what is this shit? This is so stupid. But it's actually incredible. So here's why I say this to you. Mm-hmm. This is like when you and I had this debate and you're like, bro, deficit is 6%. Of course, there's fiscal spending. No, there isn't, Jacob Shapiro, my dear cousin. What is the second derivative of that fiscal spending? It's potentially negative because the rate of change is either 0, it's either flat, or it might be even negative. If we go from 6 to 5.8, oh my God, that's austerity. Modest austerity, but it's modest. And you're like, well, no, but it's almost 6. What are you talking about? So that's the first example of this. But the same thing is with CapEx. So right now, if you go to anyone in the world and you tell them the plebs are going to struggle to buy anything over the next 12 months, they're going to laugh at you. And they're going to tell you, Jacob Shapiro, have you seen the CapEx intentions of hyperscalers for 2027? They are $850 billion, you fool. And what you should say to them, yes, but they were 800 billion in 2026. So the rate of change is decelerating. Yeah. It's because in 2024, it was 400 billion. So we went from 400 billion in 25 to 800 billion in 26. Now that CapEx spending for AI data centers is about 900 billion. So the growth engine of the US economy in absolute terms is enormous. But in that rate of change, it's not that impressive. Whereas what you're pointing out very correctly, we're in violent agreement on your increasing doom, basically, and gloom. The part of the economy you're concerned about is actually 70% of our GDP, by the way. Like, don't tell that to the bulls. But yeah, AI has been extraordinary, but 70% of this economy, not in terms of growth, but just of like what makes America, it's people buying homes, cars, Twinkie bars, Nike shoes, and all that stuff.
Surgeries, like hospital services and
all that. Yeah. And that is what you're talking about potentially slowing down further. Now, that's been neutral. It's been fine. It hasn't detracted from the CapEx story, which is why CapEx story has been so powerful. But if that 70% turns even a little, because of its scale, mathematically speaking, it doesn't have to collapse. You don't have to make a case, Jacob, in your report that like households are going to starve to death. You can just say, hey, they're going to curtail some spending. And that's enough, because that is an aircraft carrier. Whereas the AI CapEx story is like a Miami Vice yacht with some like models on it, and it's like, it's awesome. We're all like drinking champagne. We're loving it. But the reality is there's this giant super tanker of household consumption that's been kind of chugging along like pretty decently. If that even turns slightly, the wake of that is just enormous, right? And so I'm absolutely in agreement with you. Remember, at the beginning of this crisis, the two most likely scenarios were this is over quickly, oil prices go back down. Like I remember in early days of this crisis, given that I had a sanguine view, I was looking for a chance to short oil. It never came, so I didn't. But the other one was that we go to $200 oil, the Rory view, and then my view was like, and then you expect it to go to $20 because it causes a recession. So the two outcomes were both disinflationary. We had nothing but disinflationary outcomes. But because this world that we're in has been this mushiness, we're like, Rory's wrong, Jeff Curry's wrong, like shorting oil's wrong, but it's kind of like, we can just live with it, and we're all like sick. And it's like, no, but it's not sick, because that mushy also does have this corrosive impact on household ability to consume. Is just not something that's going to be evident in like May of 2026. Although I do think 2 weeks ago we had a couple of trading days where the market did fall because of the inflationary concerns, right? And so,
and to your point, like the mushiness that was in there also is a result of you had lower oil prices going into this, so you had lots of spare capacity that has been used to keep oil prices down,
and now it's got to be rebuilt,
which will be rebuilt. So that's going to like keep the price. Maybe I don't know. I don't want to predict prices, but it'll keep things elevated.
Yes.
But then also, like when I was looking at this, like that personal savings rate halving from the time that President Trump was coming to office, that was disturbing, because that's folks spending what they have saved up, the stimulus checks, everything else, all the good times. Please talk about it.
Can I double click on that?
Please.
So this is why, like, have your kids go into philosophy. Have your kids go into anthropology, sociology, psychology. I swear to God, if you're listening to this podcast and you're like, I want my kids to learn math. Why? Claude will fucking do math for you.
Also, funnily enough, when you get to the really upper echelons of philosophy, like math and philosophy are actually sort of the same. But
they come together. Yes, they fuse. No, but also, like, look, I do regret not knowing what the second derivative is until I was 31 years old, for example, right? But it is what it is. Like, a lot of these mathematical concepts, the way we teach kids is stupid. We should be teaching them through stories, actually. And I think, and by the way, a lot of other countries adopt a more verbal approach to teaching children mathematics. I lived in the province of Quebec, which has actually very, very good math scores globally. And, my daughter learned all her math verbally, which was a real struggle for her because she was doing it in a different language, right? So, but that was very, very useful. Why am I starting with this? Because I want to double click on this issue you just brought up, which was, I just swerved. What was it?
Personal savings rate halving over the course of Trump's presidency.
Yes, thank you. Sorry. Way too much coffee. I should dial back. All right. Listen. In 2023, everyone who's a Newtonian investor who thinks that investing is like building a bridge just basically took the savings rate in 2023 and said it's going to go up. Because from 2010 to 2020, the savings rate of Americans was X. And so we're going to go back to that. And the reason that I never turned bearish, I never got negative on the U.S. economy since 2022, basically, I've been YOLOing, is because I said, why do you think American human beings are going to save the way they did in the worst decade since the Great Depression? So 2010 to 2020 was an era of secular stagnation, of austerity, jobless recovery. Remember all the stuff Republicans said about Obama years? Jobless, right? Like it's a recovery, but jobs, it's terrible. And the reason it was terrible is because the savings rate was high, because Americans didn't dip into savings, and the government, which should have offset it, became enamored with austerity. We all had austerity fetish at the time. Like, oh, we must cut spending. Even though interest rates were low, we should have jacked up spending. As many smart economists like Richard Koo or Greek finance minister Yanis Varoufakis, they were right. Mathematically, they were right. If interest rates are low, that's God telling you, spend some fucking money, okay? And we didn't do that for all sorts of political reasons. But the savings rate of Americans was very high. But my argument was it was psychologically high for psychological reasons. You almost lost your job. You almost lost your home. You saw your friends and family default or have to be evicted. Like 2008, 2009 was terrible. And then the 2010s were just people holding on. And so then COVID happens, a pandemic during which we were all supposed to die. We don't die. And in fact, we get showered with cash. Kiss cash. And so what happens? Your psychology shifts. Holy fuck, I'm alive. Holy fuck, that wasn't that bad. Holy fuck, I got all this cash. YOLO. Also, homes are expensive. I can't save for that. So what's the fucking point? Let's open a Robinhood account and learn what a butterfly option is. Let's go, So that's what happened. We entered into a different mindset that you cannot fucking analyze with a Microsoft Excel or a STEM degree. This is psychology. It's sociology. And so savings rate has been coming down, which is why every bear who said that excess saving was being depleted, that was a fake analysis. Excess of what? Well, excess of what I think is the proper savings rate. Well, what do you think is the proper savings rate? What happened last decade? Brother, last decade, you might as well go into your Excel, highlight everything from 2010 to 2020, and delete those columns. They're taking you into a wrong direction mentally for where the American households are. And so what we all needed was this psychological adjustment that we're in a YOLO world where young men are buying GameStop because of vibes. GameStop's now can you this corporation literally still exists purely because of degenerates who read it. It's like I had a cousin by marriage who let's just say not fooling around in markets very much, who was recommending, I have two stories here. First of all, he was recommending Dogecoin to me because he'd made a couple grand on Dogecoin, and had I looked into that. I also remember I was checking out, where was I? I forget. It was it was a grocery store or something like that, and I was checking out, and this guy was he had dreads, he smelled like marijuana, which all good. I'm all for marijuana. But anyway, I'm just trying to give you a taste of the guy. Buddy Bayless? What?
No, even Made Bayless looked straight edge by comparison. I mean, this guy was definitely on it. And as he was checking me out of whatever I was buying, he was like, "Yo, man, what do you do?" And I told him, and he was like, "Oh, man, I just bought a bunch of Alibaba stock because I think it's a really good idea. What do you think of that?" And I was like, okay, friendly Rastafarian. Thanks for telling me to buy Alibaba.
Dude, I had, my hairdresser was buying Rheinmetall.
Yeah.
No,
that's a good one.
That's the guy fucking crushed it. No. Jason knows what he's doing. By the way, if you're in Santa Monica, you need a really good haircut. Jason in Lux Lab on Montana. Yes, I cut my hair on Montana, which just if you know what that means, you'd lost a lot of respect for me. All right, where was I? Okay, so the bears get their faces melted because they don't understand that the sociology of finance has shifted from 22 to 26. But now, as you articulated in the intro, how much lower do you expect Americans to take their savings? Right, especially because right now,
How much
Everyone,
lower can they take their savings? Like much lower, and I mean, not that past performance means future or whatever, but like the last time we were this low was literally the month before the 2008 financial crisis.
well,
Like
you can take it.
people were starting to like spend too much, and then you had the inevitable counter reaction. So you would think that something is waiting in the wings if we're going that direction.
Well, and one of the reasons for that is that I do think I worry about the psychology, right? So again, $80 to $100 oil, not a big deal, right? It's something that the households can deal with, but it's slowly going to erode their purchasing power, slowly in like almost a corrosive, the way that rust corrodes metal. It's not like holy shit, sell everything, but it's just slowly. And then on top of that, every single human being on the planet right now is being told you're not going to have a job in 12 to 18 months. Everyone's being told that by like these AI punters. And so, yeah, there's all sorts of reasons why I think a lot of consumers might want to start psychologically, sociologically, like kind of pulling back on their consumption and that savings rate go back up. And so that would be extremely pernicious, because for them to continue to spend at the same level, they are going to have to drive their savings rate lower, which, by the way, it can happen. It absolutely can. I mean, technically, savings rate could go negative. You could just start selling your assets, right?
But this also, though, goes into the point that I thought in some ways was the most important point that the CEO from Chevron made, because he was actually fairly, like, I know he said that thing about weeks to shortages, but that was kind of put in there by the Bloomberg reporter. He was very straight-laced and he was giving a very sophisticated answer. But the one thing that he said that really stuck with me, well, there were two things. Number one, he was like, refineries are at maximum capacity. So there's too much tightness in the system to push this any further. Also, it's about to be summertime. People are about to go on vacation. This is when demand increases because people are going to go to the beach, or they're going to take a flight to Europe, or they're going to do this, that, or the other thing. And that might not be there. And if that is there, it's going to be like significantly more expensive. So if you have the savings rate already low, it's been a crazy year. People like my friend are like, what is going on with the Strait of Hormuz and the tariffs and this, that, or the other thing? Man, I want to go to the beach. What if you can't go to the beach? Or what if the bill on going to the beach is 3x what you were expecting? Are you still going to go? Are you going to stay home? So are you you're pissed off at home because you've cut back your spending, or you're going to do it anyway, and the savings rate, to your point, is going to go down even lower? Like going into summer in this kind of psychology doesn't feel like a very good place to be. I don't know.
Well, I mean, I just think that that's going to be, when you put everything together, I think that you have a lot of things that brought inflation down, flatlining. You have a lot of and one of them going up. So one of the things that brought inflation down over the last 2 years was cheap energy. That's going back up. But you can argue, well, that's a smaller component of the CPI basket. Like that's less relevant than it used to be, like as many people have pointed out. That's fine, but housing and rent has also been falling for a long time. I'm not sure it can fall further. Now, some of really smart clients I talk to, they say, yeah, it can, because immigration has been so soft in the US, it can still provide a disinflationary impulse. I don't know. I think the jury's out, and I think you're betting on a lot. Like, you're betting on more supply to come online. Can demand really fall further? And the problem with expecting supply of housing to go up is that AI capex is crowding out all other spending and all other supply. So I just, when you break down the components that make up the CPI, you start struggling to see how, you gotta, and this is, for those of you listening to this is important, not so much because inflation impacts the households we've been talking about and their mentality and their confidence, but it's also because it's going to determine what the central bank is going to do. And look, I'm the most methodologically biased human being on the planet. And what I mean by that is I see geopolitics and politics everywhere, like the kid from Sixth Sense who sees dead people everywhere. Like,
I see politics. It's everywhere.
And so obviously I believe the central bank of the United States is massively politicized. But so Kevin Warsh obviously was appointed to cut. God bless him. The problem is that I do think that by the end of this year, even Donald Trump may be on board with some hikes, because all of this is going to be a crescendo after the midterms. Like the midterms, Republicans are going to get their asses handed to them. It's like too late now. It's going to be because
unless they gerrymander
nah,
away.
I don't even care. I think gerrymandering honestly is like a sign that they know they're going to get like completely like wiped.
Oh yeah, it's definitely a reason behind the urgency.
Yeah,
but I mean they're trying to like cut into the Democratic wave that is coming.
They're going to lose. It's going to be so bad. You're going to lose districts to gerrymandered. That's what's going to be. Like that's going to be a headline in November. Like put a pin right here. Like let's make a TikTok fucking video out of this. In November, there's going to be a couple of districts that's like, oh crap, Democrats carried a Republican like engineered district. That's how bad it's going to be. And the number one reason that will have happened is because of this affordability thing, because of this sticky inflation that you're basically describing. And then at that point, even Donald J. Trump might be in the let's tighten a little bit camp, like let's fight this through monetary policy. And then I do think at that point, it's going to be game over. Now, here's the thing. Markets are forward looking. So my question is, when does the market like sense this? Mm-hmm. And that's where I go back to the Baron de Rothschild quote, which is, buy on the sound of cannons, but sell on the sound of trumpets.
Which is a lovely way to say that you want the war to continue. As long as the war is going on, as long as the cannons are firing, we'll be good,
Well, I don't know if you do, but like, I just think it's such a great quote. And basically I've dedicated my whole career to just articulating that quote. The first part of the quote. What's interesting to me is that it's becoming harder and harder. When was the moment to sell on the sound of cannons in this conflict? The market has figured it out over the last 5 years. I do think that my whole book, which is just fade this, I think it's like kind of the norm now. Like there's not even a moment to fade,
Yeah, no, I mean, it's really, and this is not over yet. So we're in the middle of this. We might look back on this episode 3 or 6 months from now and say very different things. But I'm thinking back to our first episodes after the war started and how you and I were both on team. This is going to be short.
Yeah.
Because of our Strat 4 Strait of Hormuz training. And I'm sitting here on May 30th and it wasn't short and oil didn't go to 200 and things seem to be fine. So, and maybe some of that is just like oil is less important. Maybe that is, to your point, markets have figured out geopolitics a little bit. It begs to me, or raises the question to me, like what has to happen geopolitically for something to actually meaningfully do things to markets? Or is it really just something
this was always it
longer term?
By the way, my example of what would happen, like when people would ask me, well, why aren't you worried about a Russia-Ukraine thing? I would always say like, look, the thing that could is like Hormuz. So it's the one example I had. But one thing to understand is that reflexivity of markets is so important. What does that word mean? It means that policymakers adjust behavior based on the material constraints that they operate in. So both the IRGC and Donald Trump don't want a calamitous recession. That was my take. That got a lot of heat from the Twitterati, because they were all like, no, Iran wants all the smoke. And I'm like, well, that's bullshit. I don't think they do. So basically what's happened is that both Iran and the US have calibrated both their kinetic activity and the flow of shipping through Hormuz so as to push off the moment of doom. And so if you are a Newtonian investor seeped in Microsoft Excel operations, you don't understand this. The target is moving. You keep trying to use static variables in your modeling, such as flow of crude, war, premium, and you can't find, it's a moving target. This is why having a philosophy degree is better than having an engineering degree or going for finance, because it allows you to understand that there is no truth, as Michel Foucault fucking argued. There is no truth. It's a moving target, and the people in charge are calibrating their behavior so as to ensure that Rory Johnson is never fucking right. Let me say that again. The people in charge are actively reading Rory Johnson and ensuring that he's going to be wrong the entire time. They're colluding against our cousin. The IRGC and Donald Trump are colluding against Rory. Every time he says oil will be 150 because of this, they adjust the this. The this there is no static independent variable. The independent, if geopolitics or politics is your independent variable, it's in a reflexive relationship with the dependent variable. So the higher the oil price goes, the more Trump starts sweet talking peace deal, the more IRGC starts sending out tweets about 30 ships have gone through Hormuz. And then all these people who are bearish on the economy and bullish on oil price are like, that's bullshit. There is no deal. And it's like, yeah, but the people you think are static, people you have deemed with zero geopolitical experience or analytical prowess, by the way, the people you have determined are dead set at killing each other are actually dead set at proving you wrong. And so that is something that people got to take from this. Be very careful in putting in geopolitical truths into your model as static independent variables to determine the dependent one. Because the dependent variable, in this case, the price of crude, is in its movements adjusting the independent variables. And that is what George Soros, whether you like him or hate him, George Soros wrote the greatest book in finance called The Alchemy of Finance. And that's this concept of reflexivity of the markets, that only truly like level 74 wizard necromancers of finance understand. That's the level they understand. They don't trade based on the objective reality you can put in an Excel table. They trade off of the second order effects. That second order thinking is so difficult to achieve. But it's proven in this case to be the case. There's a reflexive relationship between the price of crude and the behavior of the two actors you got to predict, IRGC and Donald Trump. And they're actively trying to make everyone look wrong. And probably actively betting, hashtag,
Oh, they're definitely actively betting. You can see that based on the number of trades that Trump has done. But we don't have to go down that corruption rabbit hole. By the way, I mean, maybe most listeners will miss this. You often describe yourself as a nihilist, I think, to get away from folks who are going to ascribe political bias to your point of views. But you actually just describe nihilism in a much more significant way, like philosophically, that there is no truth.
But I believe that. But Jacob,
I know you do, and it's actually I understand now one of the reasons why our conversations are so good, because I recognize that I'm on the losing side of the battle here, but I'm still fighting for the other side.
I think just to be clear, I really hope that my three children don't have the outlook on life that I do.
Yeah, no, it's nihilism is you hope most people don't have that outlook. It's a strange person who can maintain that outlook and still be a morally virtuous person, which I would commend you on becoming. Like most people, once they go down this route, they become monsters.
Yes. It's just like, yes. Oh, man.
All right, before we wrap up, I think we should leave space to another time.
Well,
prepare a little bit more.
Can we do some quick hits?
You want to do it?
No, let's do quick hits.
Let's do some quick hits. I do quick hits. Okay.
Listen, I am quite old, so I have to go start stretching an hour and a half before all the 20 and 30-year-olds come and kick my fucking ass. So that's where I'm headed. So I do have to wrap up. But there's a couple of items that I wanted to bring up. First of all, your forecast and my forecast, but I know you've been shouting off the mountaintops. So I'm going to give you the credit for this. USMCA is going to be like, it's over. Mexican officials were quoted by Reuters. Anonymous Mexican officials were quoted by Reuters saying that the U.S. Is not at all basically... Okay, so here it is. A Mexican official familiar with the negotiations said that there were no surprises in the Mexico City talks and that there was not even a hint of suggestion from U.S. officials about pulling out of the accord. Now, what's interesting is this is a Reuters article titled, Trump administration wants to raise North American auto content to 82% with half from U.S. And then it describes that as unprecedented, sweeping demand. That's the first paragraph because Reuters, and it's the only media group that I actually truly love, like for information, them and Bloomberg, but even they sometimes fall into clickbait. And they bury the most important part of this in like paragraph 9, which is that a Mexican official said everything is fine. By the way, 82% with 50% of the value produced in the US. Oh my God, what an extraordinary level of, oh, wait a minute. Then you have to go way down in the article to see that Americans want to raise the regional content from 75 to 82. Like, Whoop-de-doo. And American content, I think, is supposed to be 42 or 45. Anyways, you were right. I was right. This is extremely positive for Canada and Mexico. This news. They are going to get a deal. So that's the first thing I wanted to just kind of quickly just remind everyone here. I think it also shows.
I just want to put two things in there. The first is like there, and we talked about this, I think, last time. Like there has been some pretty significant U.S. pressure on Mexico over the past couple of weeks. And I'm not sure that it was necessary in order to push these negotiations through.
Yeah.
But like there has been some significant pressure there. Also, like the United States has started these negotiations with Mexico and has not, like Canada is sort of waiting in the wings, and Mark Carney is waiting in the wings here. So I stick by the forecast. I'm still confident about it. But this is going to get in. This was never going to be interesting with the Mexico component, because Mexico was always going to say, yes, there's nothing to see here. Whatever they want, they want. You want us to do, like earlier this year, they were like, the United States said, we want you to raise tariffs on China. Shane Baum was like, cool, tariffs on China raised. What's next?
Yeah.
You want to do something else? Like, what can we do for you? This will get much more interesting when it comes to Mark Carney in Canada. And I think it's going to go fine. Like, I think that actually President Trump will respect Mark Carney's punching him back in the face and position. But like that'll be where things get interesting, because Mexico was always going to do whatever the United States wanted, with apologies to any Mexican.
No, and I think, anyways, it doesn't matter. But I also think it does prove, look, President Trump could make a bigger deal out of it. My 7 steps of maximum pressure suggests he should punch someone in the face at the beginning of these negotiations. I don't think that happens, because I do think of the earlier point we waxed poetically on for 45 minutes, which is your point that like this inflation story is not the same as it was 3 months ago. There's a stickiness to it that isn't just Hormuz, by the way. We didn't even talk about other things, although I hinted at it. Housing can't deflate anymore. The AI CapEx story might be more inflationary than people thought initially, you know? And so you want to have a trade war with 2 largest partners of the U.S. in the midst of all of this? Why? So that's the first item I want to talk about, and I'm glad we did it. The second item I want to talk about was space. So apparently...
Well, hold on, wait, just one thing on that. Maybe President Trump is so brilliant that he understands the second derivative, and he attacked Iran precisely because he wanted to raise inflation now so that the rate of change would be going down by the time we came into the midterms.
Well, then he misjudged that, because there's not enough months for that to happen. But you're basically, that is kind of like close to TDS-DS there. Has it rubbed off? Has my TDS-DS...
Uh-oh, it's airborne.
It's
the virus
airborne.
Is mutating, guys.
We did see each other like a couple of weeks ago. So like maybe you got some of that TDS-DS. That's... No. Marko Papic changed his life by understanding what the second derivative is. But Donald Trump operates on the third derivative.
Or third derivative. Well, yeah, that's really...
That's what it is.
Boom.
All right, one more thing I want to...
Space.
So there was an article, I think in BBC or somewhere else, I'm not sure where, but it basically said... Yeah, BBC, okay. That President Trump, the Trump administration would like to land the man on the moon by the end of his, second term. Like this is one of the things we're trying to do. It was just like an off comment there. And I just like looked at this, Jacob, and I was like, oh my God, we're going to fry some astronauts. Like some astronauts are going to get fried, man. Like, so basically you're telling me we're rushing, putting the man on the moon, or a woman, of course, all genders. We're trying to put humans back on the moon by 2028 because the Trump administration wants to get it done. Like, and again, I'm the guy with the TDS-DS. I'm not the guy with TDS. Maybe that your TDS is rubbed off on me. But this just sounds like a terrible idea. You don't rush putting humans on the moon. If it takes place under J.D. Vance administration or the AOC administration, God bless them. Trump can still take credit for relaunching space exploration. But this is like, man, I see visions of like shit blowing up.
The article you're talking about was published 4 days ago. Literally yesterday, a Blue Origin rocket blew up on the launch pad. So, thankfully no one was killed in that. But you've already got your forecast coming true, because things are
rush
blowing up.
Space travel. Okay? Well, you know why? Because you kind of need STEM degree people for this shit. Okay, this is not philosophy.
Well, there's a more serious point in this, because if you go back to the original space race between the Soviets and the Americans, they were rushing to beat each other because it was seen as this big thing. And ironically, the technology that came out of the space race is the reason we have a lot of the technology that we're dealing with today. But it was not the geopolitical advantage that you might have thought that it was going to be. that might not be true. Like the reason that countries like the United States, China, even Europe, some of these other countries are thinking about their own independent space strategies is because of what's happening with robotics and what's happening with AI. Like there's a real competition brewing for being a leader when it comes to space-based platforms and technology. And China has been racing ahead here. So there actually is some urgency on the US side to try and get into a space race kind of mentality. And to your point, really hard to do that when the deficit is where it's at and you're doing all these other things and inflation is increasing in general. So the problem with President Trump or the Trump administration is like, you've already seen this. Like, look how JFK used the space race to justify all of this spending. Like, it was a masterclass in how you convince Americans to pony up money for something that was not, at least in an immediate term, going to do something for their lives. It's not going to work if you're just like, yeah, hey, Jeff, let's do some Blue Origin rockets, and Elon, I need some SpaceX, and let's do a couple other of my cronies. We're going to send up some rockets, or we're going to send some people to the moon. There's actually like a real opportunity there to say, hey, space race 2.0. We have to beat China. We have to beat the Europeans. The world has changed with Iran and Russia, Ukraine, and Taiwan, and everything else. This is our opportunity to maintain American supremacy. Like, you could make that argument, but they're not making that argument. They're doing what you're talking about.
Well, you can make another argument about the space situation that I think we need to dedicate a whole podcast to. More and more extremely sophisticated clients of mine, particularly in the long-term investment community, are flagging the political backlash against AI. And so Elon Musk, yet again, proves to be absolutely a genius. I mean, like, you know, like he can't do any wrong because every time he says something completely insane, it's like, oh, fuck, no, that was actually a good idea, man. Like, let me hit that bonk, by the way, whatever's in there, like, clearly is amazing. Because his idea of putting data centers in space, we all laughed at it when it came out. But holy shit, that's a good idea. Because if data centers are going to be politically reviled, like putting them into space is the only way that we're going to actually like continue the AI development. I mean, like, what is it? Half of the US states have actually banned data center build out.
Yeah, I mean, it's trending that direction.
It's trending in that direction. And if you get administration shift in 2028, Elizabeth Warren, by the way, trying to stay relevant, she just published like a manifesto, I think, or a speech where she said she wants to tax AI data centers and AI proceeds at a very high level to finance universal healthcare and cheap education. So there is definitely a move towards that. And I think putting data centers into space is almost like a requirement now. So when you start thinking about these heavy lift rockets that the US is leading in, thanks to Elon Musk, this isn't just a joke anymore. This isn't just a boy's dream to like put, internet into space. This now becomes actually kind of critical. Like low key, this becomes critical for the data center build out. But anyway, so that's where this isn't a joke anymore. It's serious. The last thing I want to bring up, by the way, we definitely need to do a whole episode on this because I think
that was just, I'm sure that some people will be listening and they're like, oh, that was too shorthand. Like, we will do a whole thing on space. That's on my list of things to actually develop. So don't worry, we're coming back to that.
Jacob just has to write a report and Marco has to go get his ass kicked by 20-year-olds. Okay, finally. The final thing I want to say as a little intro. So we do have the World Cup coming up.
Mm-hmm.
And I'm shocked, surprised, disappointed that we haven't yet done a dedicated World Cup of football, soccer episode. So I do want to just preview that we have something cooking. We are going to record, I believe, this week coming up on Friday, June 5th. And we're going to have a little, I think, gem for everybody. A nice little treat. We're going to talk about some forecasts of who's going to win. And we're going to talk about some geopolitics of football, which, by the way, to me, as a child growing up in Yugoslavia, the 1990 World Cup in Italy, I don't even know if you were born then, Jacob. Like, you were?
I was around.
Okay, you were around that. The 1990 World Cup in Italy was one of the very important moments in my life in terms of like becoming geopolitically aware. I remember I had this book where I like drew the flags of every country that participated and like, like whatever. Like I did a lot about that. So I love the World Cup. I have stopped following soccer though. because with 3 kids, the jobs that we have, and also our passion for basketball, yeah, something had to be cut. So I have not followed football since the Galacticos of early 2000s, which, if you know what I just said, means I am 25 years with no knowledge. But we're going to bring some people on who definitely are passionate about this, and so we'll have a good conversation.
That's great. And, I'll have to brush up because my soccer knowledge is next to nothing. So I'll reprise my role as Charles Barkley, except Charles Barkley doing analysis of soccer as a basketball expert.
No. My favorite thing about Charles Barkley is how, he's just like an old cranky guy. And he's just like, who's Jordan Clarkson? Like, what team does he play on? It's like, oh my God, bro, like, this is your job. You know what I mean? Like, so I actually think you should not brush up at all. I think you should just look. You got to be the MC.
I'm just gonna lean in. I'm just gonna lean in.
Be the MC. Be the MC and be like, just ask us like questions. I also am not going to brush up. Honestly, like it's just too late for me. But one thing I will say before we wrap up, I do want to say what's incredible about World, and I mentioned this in the book as well. Predicting like who's going to win the World Series in baseball is pretty easy. Like who spent the money, right? Good luck to everyone who's not the LA Dodgers, by the way. NFL, predicting who's going to win, like you got to have a good quarterback. There's just very rarely does somebody like win with a crappy quarterback, like the Baltimore Ravens that 1 year when they had, what's his name?
Trent Dilfer. Yeah.
Tony
Banks and Trent.
Well,
Dilfer?
Actually, and then later they had the other guy who got a huge contract. My brain just stopped. But anyways,
Flacco.
Yeah.
Flacco could at least throw the ball down the field. Trent Dilfer literally couldn't do anything.
Right? No, fair.
I mean, and they still won. But that's very rare, right? Like very rare. You have to have like a preternatural defense. You have to be orders of magnitude greater than everybody else around you defense.
And then basketball, you've got a 7-game series, okay, which really difficult to have the underdog win. And then it's a court of 5. It's a small geography. It's a small court. And you have a starting 5. And so the quality of players really matters. In other words, Allen Iverson can get the Philadelphia 76ers into the finals and to steal a game from one of the greatest teams ever assembled because of just sheer superhuman qualities. Cristiano Ronaldo cannot do that with Portugal in a World Cup. And so predicting the World Cup is so incredible, right? Because it's a huge geography. It doesn't matter how high quality of a player you have. They get lost in the sea of mediocrity. And so, and these teams have you have no data. Like the French team in the 2026 World Cup is different from the 2022 edition. And they've never played together other than like maybe at the Euros 2 years ago. Like you have no data with which to assess whether this team has the chemistry, has gelled. Are they going to be able? So what ends up happening is that this is why I love this, right? This is why it's so geopolitical, Jacob. What ends up happening is that the national federations adopt a style of play over decades. There's a Dutch school of football. There's a German school of football. There's an Italian school of football, and the reason that happens is because you have to gel very quickly before a major tournament. So it's like, fuck it. We're just going to play the counterattack, or we're going to play total football, or we're going to do whatever. And that creates these kind of almost geopolitical, like immutable variables, the imperatives we talked about. So football, predicting World Cup events is actually the closest to geopolitics that you get. You have a relatively solid superstructure in which new players come in. So yes, you need to know something about the players, but also you need to know about the style this federation plays. And so they always kind of try to slot the player into the role that somebody played in the 80s or 90s or, and the reason I tell you this is that, I just recently saw my dad in Belgrade and it reminded me, we talked about the World Cup and everything. And I remember when I was a kid, just watching my dad sitting on the corner of his couch, just smoking cigs, watching, and he would always, like we were watching a soccer game and I would be like, yo, the Danes are hot. They've got these 2 players that play in the Bundesliga. Like, Dad, like, I think they can really beat, like, Germany or something. And my dad would just, like, kind of take a, like a bad example, because Danes have beaten Germany before, but, like, he would just, like, take a long, like, drag on his cigarette, and he would say something like, Marco, like, 2-1, Germany. And I'd be like, fuck you. How do you know that? Like, you didn't even look at the roster of players. And he'd be like, okay, yeah, sure. Okay. Yeah. The roster of players is going to help you predict a quarterfinal game between Denmark and Germany. Sure. And, sure enough, he would be right like 70% of the time without even looking at a single player. And I always found that fascinating. Like, Dad, how can you predict this? And he would always tell me, like, look, Italian style of play and Romanian style of play just don't they clash. Italy will win. Or he will say stuff like it's too big of a moment for a small country. Shit like that I was always like, you're such a stereotype. You're stereotyping. You're not giving these players in this moment, in this time, the chance. You didn't even look at what teams in Europe they play at. You didn't do any of that. You're just being like you're just stereotyping. And it was like, no, he was doing structural, top-down macro analysis, seeped in history, knowledge of style of play. And it didn't matter that some striker for Romania has a great contract with like Real Madrid. Those things just didn't matter to him. He just knew this moment was so huge and what you needed to win these games. So I actually learned how to be in it like a forecaster through World Cup.
Well, I mean, so let's get out of here on this. I mean, speaking of that, making predictions, this will come out after this, after the game has been played. But Game 7 tonight, Thunder-Spurs. Who you got?
Oh my God! Whoa! Right on, putting me in a spot, man. I think the Spurs were a deer in the headlights in Game 5. I think the crowd got the best of them. I think the moment got the best of them. And I think that's now done. That's not going to happen again. And so I'm going to take the Spurs because the Thunder are not at 100%.
All right. I'm with you. I got Spurs tonight easily, and I got Spurs in 5 in the finals. So you can probably take the exact opposite of that.
I'm just saying.
I pride myself on my basketball. I pride myself on my basketball takes being as bad as my geopolitical takes are good. So I'm going out there and being like those big women in San Antonio. They're gonna be celebrating with the churros.
But one thing I will just say, I think that the Spurs, they're super young, and they got caught in Game 5. That was a terrible game. They were terrible. They were like objectively just. And I think that the good news is it happened in that Game 5. And that's I don't think that's going to happen again. And I think that the Thunder have been playing out of their mind, particularly the role players. But like the refs have also. This is what we talked about last time. The refs are not going to stop calling fouls, and they're not going to stop calling what benefits OKC. But that gives you an opportunity, and I think the Spurs have figured out. So Castle's out there doing his Marcus Smart impersonation. And, this is the problem with SGA. And this is, by the way, the problem of calling him the next Michael Jordan.
Oh, yeah, he's not. Like, be quiet with all that stuff. Like,
the problem,
he's not even close.
And the problem is that his team has created this extremely handsy defense in the playoffs now trend. And he's getting, like, this is, God is punishing him almost. Like, it's this reversal where because Dort and Alex Caruso get to manhandle people like Jokic and Wembanyama, the refs let the counterparties manhandle SGA. And now you're in a situation where you're realizing, oh shit, he is human. It's like, yeah, anyone's human if you got people on their back, except for MJ, who had that because it was the fucking 90s and he had to deal with that night in and night out, and he didn't give a shit.
Not only is SGA human, he's not going to be the best player on the floor in Game 7. That person will be wearing a Spurs jersey.
Well, and that, by the way, Game 5, hey, listen, that was atrocious performance by Wemby. Atrocious.
Yeah, it was. And if you go, I mean, I know they're few and far between, but Jordan had some clunkers too. Sure. He didn't win every game. He won every series.
No, Jacob, he's 22.
If Wemby is for real, if my Wemby unipolar take is real, Wemby's got to bring it tonight. Show me Wemby, because I bet the house on you after Game 1. I'm ready to roll. Show me what my early bet has purchased.
The only thing I will say, and I know we're egregiously over time, but so don't forget that like he's 22 years old. LeBron James in 2011 was 26 years old. I think you were at Stratford then, and in 20, yeah, you were. And remember, we talked about how much he stunk in the 2011 playoffs when Dirk Nowitzki just like did the most epic run ever. And I think that LeBron at 26, the bright lights were too big for him. So I do also think that you are absolutely right. You've like condensed and distilled what this Game 7 is going to be about. If Wemby goes back to that Game 5 shell of his, I don't know what the fuck he was doing on the 3-point line. Like, get your 7'6" ass in the paint, right? Like,
yeah.
But like, it can happen to these guys because you're so young. Where were you at 22? Where was I? You know, where were we mentally? Right. And I think that just remember, LeBron at 26 years old with a super team lost to Dirk because the moment got too big. He crumbled mentally in that series. And he
did.
If that happens to Wemby tonight, I'm not writing him off, and I'm not judging him. That's all I'm saying. Your unipolarity take might still be right.
I'm not writing him off, but I will judge him, and I will judge him negatively.
No,
that breakdown from LeBron is like, anytime the conversation comes up about comparing him to Jordan, it's like, okay, that didn't happen to Michael. I'm sorry. So like, LeBron can be the second greatest player of all time. He's not number one precisely because of that series. So Victor, if you want to go for the greatest player of all time, somebody like JJ Barea can't check you in this game.
I know,
stop
but
you from getting.
All I will say,
listen,
Jacob. So the reason I will disagree with you is just remember, like Jordan was he still at North Carolina at 22? Like, all I'm saying is like when
he went to college.
He's so young. He's so young, right? If LeBron,
you don't choose when the moment comes. You're either up for the moment when it comes or not. I love the LeBron defense because now he's a Laker. Like, come on, like
I'm not defending him.
He got checked by JJ Barea. Like, that can't happen.
But
if you're going to be
I brought up
the
LeBron,
greatest player of all time.
I
know you did.
I brought it up, and I'm not defending him. I'm not defending
No, but you're saying I shouldn't judge Victor negatively if he crumbles. And
well, he's 4 years younger than LeBron.
I'm saying he's in rarefied air. I'm saying the Michael, like the greatest player of all time mantle is available to Victor Wembanyama, but he needs to kill tonight. Like, if he breaks tonight, fine, he can be in the conversation for second greatest of all time. But this is the moment, man. It's here.
I don't know. Like, I definitely hold the 2011 finals against LeBron in the kind of annals of history. And one of the reasons is he was 26. He wasn't a super team with other veterans. The reason that I will be softer on Wemby than I am on LeBron is because he's 22, but his teammates are also like babies, you know?
Yeah.
There's no Bosch. There's no, like, dude, in 2011, Dwayne Wade had the MVP of the finals already. Don't forget that. He was a champion, right? Like, and so
he was arguably the best player on that Heat team.
Spicy. Yeah, because like all LeBron kept doing in that series was passing. And so what I would say to you is like, that's the only thing I disagree. I agree with LeBron. No, like, he's a Laker, but like, yeah, that is definitely a problem in his resume. I will give Wemby a pass for this and maybe next year. Just because 22, 23, it's like, just the fact that he's here, you know, like, and that's why they lose, by the way. You know why they lose tonight? Here's why they lose tonight. If they lose tonight, it's because they're satisfied.
And I don't think they are. I think we don't even have to worry about this because I think this is going to be a Spurs walk in the park. But we'll see how stupid I look by the time listeners listen to this.
I think it's going to be a tight game. And I think Wemby, one thing that I know from watching even in Europe, even in international play, like, fuck, he wants the smoke in the last quarter. Like, he steps his game up, man. You know? So I think it's going to be a close game, and I think Wemby takes over in fourth. So let's see it.
All right. Get yourself to the court.